Welcome back. The Fed's big decision on interest rates is fast approaching this week. The central bank set to meet tomorrow and Wednesday to decide whether to cut rates, a major priority for President Trump. And Fed Chair Jerome Powell suggested last month that it could be time to do so. But the Fed will consider new data showing inflation ticking up and a slowing job market. Now, this meeting also comes as President Trump tries to remake the Fed, pushing to oust a member of the Board of Governors and install a White House advisor to serve. Joining us now, NBC News senior business correspondent Christine Romans and former chair of the Council of Economic Advisors, Jared Bernstein. Christine, let's start with the rate cut decision this week. Are we still expecting them to cut?
Yeah, the Fed has been on hold for so long here, worried that inflation and maybe the president's own tariffs might fuel more inflation. But now the concern seems to be a weakening job market. So the expectation on it is there will be a 25 basis point, as they say, a very small cut to the Fed's target interest rate. You can't rule out maybe a little bit bigger move. Potentially, a few people think that could happen. But it looks like the conventional wisdom, they think the Fed, for the first time in months, will cut rates on Wednesday.
Quickly, if you
Okay. Oh, there we go. Okay. So there's a lot to unpack here with the rate cuts happening this week, which is, I think everyone, for the first time in a long time, is actually on the same page that the Fed is going to cut rates. Large part of that being is because of the job markets and what, those reports came out to be, and then what the revisions of those reports have to be, I think, going as far back as June. I think it's June or May, one of them. So the job market is just terrible right now, for lack of a better word. I mean, if you ask anyone who's looking for work right now, they'll tell you that it's the new term now is job hugging. Everyone's hanging on to whatever they have, rightfully so, because there's just nothing out there, especially if you're in a higher tier area, higher tier pay range. So that is forcing the Fed's hand to where they have to lower rates to, drum up some, get the economy rolling again. But what happens when they do that? And by the way, my call is I believe they're going to go for a 50, but a 25 wouldn't shock me. I think they'll go 50 basis points just because, and my reason for that is because they're behind, right? So they're trying to catch up. And those, generally, when they do the rate cuts, it takes a little bit longer to actually work its way through the system, through the economy. So you may not see it for another 6 months. However, we already are seeing a lot of lenders respond. And so I think interest rates right now for mortgages are going down, which is, a right direction for a lot of us. But here's the rub. Once you have trillions of dollars sitting on the sidelines, because investors, a lot of them got out just because they couldn't play in the market with very high interest rates. So they had to wait. They're waiting on the sidelines, right? Because what does an investor want? An investor wants a deal. Interest rates come down and you can start finding those deals and paying, low pricing. Because you can pay cash, right? There's going to be a significant transference of wealth that happens, because a lot of people with money and with access to capital are going to be the main beneficiaries of the rate cut. That's not to say that you won't see, if you have debt, all that type of stuff, you won't see your payments come down. I'm sure you'll probably see a move in the right direction on that stuff. But when it comes to real estate, because the goal of the administration, at least Trump's, what he said is he wants to get people in the homes and make it more affordable. I don't see how that happens, to be honest. Not to be doom and gloom, but it's too sticky. Real estate is too sticky. And 2020 really did a number on us. I think we're going to develop or already have a renter nation, which, by the way, let me just say is not good. I don't agree with it. I think it's bad. I don't think you want that. The natural home buying process, people go to college, rent an apartment, get out of college, get a job, get their apartment and move to whatever city they're moving into. And then they start to get serious and maybe buy a condo or small starter home. That natural progression of life is just broken. And the Feds really just kept rates too low for too long in 2020, even 2020, 2021. So it's taken a while to kind of even get to this point. We got a lot of sludge in our engines. So we're one of the last few nations to actually like start cutting interest rates. And I think Britain, what you're starting to see is a lot of transactions in real estate kind of move due to their interest rates cuts. So very interesting. I think that I'm calling a 50 basis points cut. That's my call. I could be wrong. That's okay. If I'm wrong, I'll be the first to admit it. But yeah, I don't know that it's helpful, but it's needed. Kind of a weird thing because a lot of people with capital are gonna make a lot of money. So very just an interesting time. Interesting time. My recommendation is always live at or try to live below your means. If you can't, definitely live at your means and try to spur up some more income or however you can do that, and then pay off those debts, save some money. Keep it simple. Don't try to get too cute. People get too cute and lose their, you know, shirt. You don't want that. If something sounds too good to be true, probably too good to be true. And surprising enough, this environment is a great time to get into a business of some sort, or you can add some type of service. I don't know. I I I just feel that way. There's a couple of things that I'm trying to think of and start myself, but I don't know. It just seems like a prime time to kind of get into something. So let's see what else they have to say.
If you will, Jared, what are your expectations, and what does it mean for the average American if they do cut rates?
Yeah, great question. Well, my expectations are much like Christine's, but the market expectations are a 96% probability on a quarter point. That's what Christine was talking about, a quarter point rate cut. What does that mean for American households? It's kind of really more a question of what did that mean? Because at this point, that cut is priced into markets. One thing we've seen is the 30-year fixed rate mortgage rate coming down, somewhere even below, I think, about 6.5, maybe 6.3 last I looked at it. So that was 7 not that long ago. So it means lower mortgage rates, lower credit card rates, auto loans. This is helpful for people who are considering borrowing, maybe engaging in a project, small businesses, households. But at the same time, the backdrop, as you said, is a weakening labor market, and that's also a very big deal for working Americans.
And now to those other developments involving President Trump's efforts to fire Fed Governor Lisa Cook. Separately, Christine is trying to install White House advisor Stephen Myron into another open seat. Bring us the latest on both fronts.
So Stephen Myron would need to be confirmed by the Senate, and that could happen. I mean, it's so interesting. We don't really even know who's going to be voting this week at the Fed meeting because there's so many developments up in the air. The president has appealed a ruling that would have allowed Lisa Cook, that Fed governor, to do her job this week. So we're waiting for an appeals court ruling on that as well. So if Stephen Myron gets confirmed by the Senate, he could theoretically be in place for that Tuesday meeting and Wednesday meeting and vote. And Lisa Cook, we're just still waiting to see what happens with her. It's interesting. NBC News has reviewed some bank records of Lisa Cook that appear to cast doubt on the White House allegations about mortgage improprieties. We saw data or paperwork that showed her Atlanta home was listed as a vacation home, not a primary residence. Also looked over a loan summary and a national security questionnaire from 2021, again, that listed that property as a vacation home. Her lawyers have said there's no wrongdoing here at all. There is no mortgage fraud. This is a sort of a witch hunt from the administration trying to.
Last I heard or checked, or not checked, but last I remember, I don't think the president has the authority to even I think they can appoint, but I don't think he can fire. Correct me if I'm wrong. You guys let me know in the chat. But very interesting story. A lot of developments happening here. More focused on like the interest rate cuts because I think that's going to say a lot about our economy and where it's headed. I don't know. It's a weird time because at one time it's. Let me gather my thoughts. Slow down. It feels like there's doom and gloom on one hand, And then on the other side, it feels like a lot of opportunity on the other hand, and a bull market is coming. Um, and I think it just depends on how you've positioned yourself, right? If you've laced yourself with a lot of debt and you just have done a lot of things, you're in the camp that this is going to be bad, which, yes, it can be if you don't get it together. On the other hand, if you're in the camp that you are getting it together or you got it together, this could be really good opportunity to pick up some properties and try to do some good deals, seller financing or whatever, and get into the market at a very reasonable cost. Let me know what you guys think in the comments. How are you feeling? Um, let me know. Yeah, just let me know your thoughts. Don't forget to like, comment, and subscribe. I appreciate you guys, and we'll see you in the next one.